There's a reason I fight you guys in the comments over the importance of the principles of crypto. What's up, sons? It's Blind Rod with Son of a Tech once again, and today we're going to be talking about yet another scandalous disappearance of cryptocurrency in an exchange. And yes, this came out yesterday with the news. We're going to cover it today, and then we're just going to be doing a little bit of a talking head video over it, but not until a word from our sponsor. The following is a paid advertisement. PrimeXBT is an established trading platform that was founded in 2018 and remained in business through the bear market. From my personal research, there are three main reasons they set themselves apart from other trading platforms: high leverage, low fees, and most importantly, privacy. PrimeXBT requires no user information to start trading. The newest module, called co-vesting, allows users to copy the trading activity of other users. Remember, any form of investing comes with significant risks, so do your own research. Use promo code SONOFATECH at sign-up for a 50% bonus. Welcome back. So, just like the exchange we're going to be talking about here, you should be just as careful with the exchange that was the sponsor today. There's a lot going on in the crypto space, and it's frankly a sketchy industry to be in if you're not very, very careful. So today we're going to be talking about this crypto exchange founder disappears with $2 billion. Give me all your Dogecoins. The founder of a popular crypto exchange in Turkey has disappeared, with media reports indicating that he has fled the country with $2 billion, as roughly 300,000 frustrated users have suddenly lost access to their accounts. In Turkey, the national currency lira has been in secular decline for 9 consecutive years, urging people to take some risks in a bid to protect their savings and maybe even earn something. As a result, the recent rise of cryptocurrencies predictably attracted many investors who hoped to protect their money and possibly gain some more. But things did not go well for them, as Thodex, one of the country's largest cryptocurrency exchanges, went bust. Governments cannot control cryptocurrencies, as they shouldn't, by the way. As a result, they can quickly rise to an all-time high or rapidly drop, making them particularly attractive investment instruments, especially for those willing to take a risk. In Turkey, anyone can establish a crypto exchange with just 50,000 liras. That's about $6,000 in US. Consequently, crypto exchanges are often run by people without proper financial education that serve unqualified investors who do not understand all of the risks. Look, this is something we have issues with on this channel as well. I am not an investor. It's something that I try to clarify a lot. I only try to provide primarily technical information for mining in particular, and then I discuss topics like these that do relate to investments. And yes, mining is an investment as well, but I always encourage you to do your own research. And even when we're picking up sponsors and stuff like that, I try to make it very clear if they're centralized or not centralized. It's a tricky business, especially if you are someone that is, in the public eye, like cryptocurrency exchanges, or even myself as a YouTuber covering it. It's a difficult position to be in. Thodex was one of the largest cryptocurrency exchanges in Turkey with 700,000 users, many lured in by an introductory offer of millions of free Dogecoins. Apparently, most of those Dogecoins were never distributed. To make matters worse, media reports that as many as 391,000 users have now suddenly lost access to their accounts. Following reports, Thodex temporarily closed the platform to address an abnormal fluctuation in the company accounts. Meanwhile, Farik Ozer, the founder of Thodex, has flown to Albania, taking $2 billion of investors' money with him, reports CNBC. As you would expect, the Turkish Justice Ministry is seeking a so-called red notice with Interpol to arrest Ozer. Thodex denies all allegations and says that the problem impacts only 30,000 of its clients. The company further states that the inaccurate media reporting has ruined its reputation, making it impossible to continue operations. This is another interesting thing that we need to go into. So there's a couple different talking points here. The allegations that accounts of 391,000 people disappeared after a loss of approximately $2 billion, which was reported to the public on the 22nd of this month are unfounded, a statement by Thodex reads, "It is necessary to make this statement in order to respond urgently to the claims that go beyond the limits of honesty and conscience. The founder of Thodex vows to return investors' money, but hasn't revealed how and when he plans to do it. Meanwhile, a lawyer representing the investors said the money has become irretrievable, according to Bloomberg." Okay, this is eerily similar to, of course, NiceHash hack that happened back in 2017 to 2018, which is also why I'm not a supporter of NiceHash. I understand you guys don't like that I bash on NiceHash a lot, but these are the types of things that happen when a company or an entity goes against the principles of cryptocurrency, meaning the biggest ones are going to be decentralization and trustless, which are basically go hand in hand. I usually would take trustless to be aimed towards primarily currencies, as the decentralization would mainly be aimed towards trustless, meaning it doesn't have a bank in between the transactions of you and me. These are important principles that are definitely being kind of lost and put to the wayside in basically for convenience, right? NiceHash is more convenient, so people use it. Coinbase is more convenient, so people use it. And we start to kind of lose sight of what the actual goals of crypto and cryptocurrencies are supposed to be, at least in my humble opinion. Now, the reason why these are important is because if you trust somebody like an exchange or whatever it might be to hold your cryptocurrency, then at that point you don't have control over it. We'll go back and we'll say it again, not your keys, not your crypto. It's a big kind of pain point for a lot of people that have been in cryptocurrency for a long time when we see new investors flowing in, buying Dogecoin on Robinhood, buying Bitcoin on PayPal, buying Ethereum on Venmo. These are dangers that we have seen previously, and it's hard to iterate it. So when these things happen, I like to cover it so you guys can see what is possible when you are leaving your cryptocurrency in exchanges, even exchanges that we have advertised on this platform. Luckily, the exchanges that we've advertised on this platform allow me to at least let you guys know that they are centralized, and you are better served to not keep a majority of your cryptocurrency within them. It's never a smart idea to keep a majority of your cryptocurrency in any exchange that is a third party, right? Now, that can be a little bit different if we start talking about DeFi and decentralized exchange options, but those are more complicated. Once again, I go back to the problem of us giving up basically decentralization and trustless systems for convenience. And I can only warn you guys of these types of things to help you guys understand that this could happen to you, this could happen on any other exchange, etc. Now, what's really interesting here is that the company is basically taking a play out of NiceHash playbook, where they take the cash, they liquidate it into a fiat currency, they take off with it, and then they promise to pay everybody back. Well, that does mean that they do probably think that currently we are at kind of a high point for cryptocurrency. And maybe the bet is, kind of like NiceHash did, is that we are going to see a dip in, of course, the price of cryptocurrencies. And if that happens, then they can buy back, they can keep a fiat profit and then pay everybody back and basically be able to pull a fast one on you. And that's kind of what NiceHash did. And this definitely reeks of almost the exact same play, right? Where they are saying they're going to pay you back, and they most likely could. But if they pay you back when Dogecoin goes back down to sub penny, then they already made all their money, right? And then you have to wait for that to go back up and the market to come back up for you to even make back what you lost. It's a sketchy proposition. And we just go back to needing to make sure that we push projects that are further decentralizing cryptocurrency and adhering to the basic principles. And I know that this is a topic that a lot of people don't like. And that it's especially not a topic that people like in the US, because if we talk about the US and their regulations on cryptocurrency, decentralization and trustless are things that the US is not really happy with regulation wise. And that's because they want to be able to track it to make sure that they pay taxes, and they don't want to trust you to pay your taxes, right? They want to be able to track it so that they can basically get the money that they feel you owe them. And I understand that. I do say that you need to pay your taxes. I pay my taxes. Obviously, it's maybe a little even more important for somebody like me in the public eye with cryptocurrency to overpay in taxes, which is what I try to do more than anything, right? But it doesn't mean that centralization is the way to solve that, right? It doesn't mean that making sure everything is registered and going through the books and the separate entity is controlling it is the way to solve that. Maybe what needs to happen is we need to figure out a way to decentralize that process, and then at least that would be a little bit better. Thoughts, opinions down below. This is an interesting topic, I think. So let me know what your thoughts and opinions are on this. Obviously, I'm just going to reiterate, don't keep a bulk of your cryptocurrency in an exchange or a third-party system. Now, we do probably need to address the mining pools are centralized, or they are, a third party. That is true. They do have a master wallet that gets paid out to it, and then when you hit the minimum payout, it disperses it out. The difference is kind of being there is that if the pool doesn't pay you out, you just move to a different pool. Maybe you lose like one minimum payout. If you are basically holding your cryptocurrency in something like even NiceHash or an exchange, if you're holding it there, then that's a completely different thing. You are risking losing all of that. So that's why there's that fine little line and distinction between mining to a mining pool and keeping your cryptocurrency in Thodex. I hope that is clear. Thanks for watching. I will see you next Tuesday. If you enjoyed this content, you can check out more crypto content on this playlist up here, or of course, go ahead and subscribe for more in the future. Adios.